One question which people have been asking me, especially over the last 12 to 18 months, is do I need to invest in international funds? This question is difficult to answer. The question is, do you need to invest? No. The answer is you don't need to invest. All of us will have a home bias, and whatever we do, mostly our investments would be in the Indian stock exchanges or Indian mutual funds. However, you can add some flavor, or like they say in Hindi, tadka, to your portfolio by investing abroad. Like I said, what is a tadka? It's just a vagar, right? You add very little, you don't do too much. So maybe 10 to 20% of your portfolio exceeding 10 crores, or maybe 1 million US dollar. I've been telling people that the cutoff should be 1 million US dollars. If you have at least 1 million plus in Indian investments already, then you should invest in foreign markets. Why invest in foreign markets? Well, if you are the new investor who believes that indexing works, then internationally Indian markets are less than 3% of the world markets. So if you believe in indexing, you should be doing international indexing. So it means India will have only 3%. That rarely happens. So you may have already invested in Indian funds, including Indian index funds. So therefore you can look at investing abroad. If you look at the AUM, largely there is Franklin Templeton at 2,200 crores, which is a US based fund, which I do think they must have sold only 600-700 crores, which has appreciated to 2,200 crores. Most other funds are smaller. There is Axis has a fund which is about 1,100 crores. Then there is Motilal Oswal, which collected a lot of money in an ETF when they collected about right now they have 1,700 crores. All the others are less. There is then internationally, when you invest, you can also, when you are doing investing in metals, you're investing in international funds, right? Because it is gold is an international commodity, whether you pay for it whether you invest in India. Now DSP has a fund which invests in gold and gold mining companies. You cannot get gold mining companies by investing in India. Similarly, DSP has another energy theme, which again invests abroad. It has energy and renewable energy, right? So Axis as a global equity fund which has got a corpus in excess of 1,000 crores. All the others are below 1,000 crores, but I think they are all growing very fast. In fact, most of the funds you will see are in 2 digits. They will have 20 crores, 30 crores, 80 crores. That is the range in which most of them are. But the older fund houses, which include Franklin Templeton and DSP and ICICI, they have some traction, and Motilal got good traction when they raised money in the ETF. So this is the scenario in India where you can invest in these funds, and of course PPFAS invests about, right now I think their weightage is about 20% in US funds. I don't think PPFAS looks beyond US, so these are the funds which are available to you. Also, DSP has a fund which invests in equity and debt abroad. I don't know, I mean, please, I stand corrected, I'm pathetic in research. I don't think there is anybody else who has some fund like this, but I believe Invesco has an income fund which invests abroad. Largely these funds will protect you against the inflation, because we are assuming that inflation in US is 0 and India will have say 5% inflation. So which means the dollar will appreciate on an annual basis by about 5%, which may not happen year on year, but will happen over 5 years or 6 years. We also assume that the dollar will always appreciate against the rupee, which may or may not be a right assumption. So to that extent also you gain because you have invested abroad. What are the other advantages? One, first of all, you find a lot of fast growing companies. India does not have fast growing companies which are listed. So if you want to invest, you have to go to those countries where these companies are allowed to be listed. So if you want to invest in Facebook, in Ola or Uber or whatever, all those companies which perhaps operate in India, but you can't access them because they are not listed in India. So you have to go. India does not have that kind of fast growing company. So you will have a fund in India which says we will be in growth, or we will be in fast growth, or the high growth, but there is just not enough themes. There are not enough themes available for you to invest. So therefore investing abroad makes sense. The dollar appreciation we have already spoken about, and gives you a variety. You can invest in sin stocks, right? You can invest in arms and ammunition companies in US. You can invest in companies which are in adult entertainment, in casinos. In tobacco companies. You can invest in Reynolds. Of course, there is Godfrey Phillips in India, which is a tobacco company, but it's still too small. So you may want to build a portfolio with stocks which you just don't have that kind of variety in India. So you can invest in Japan, you can invest in China. Those are the other advantages, because investing abroad does not only mean investing in US. For example, the ICICI has a fund which is a global asset allocator, which is invested more in Asia, Asia ex-Japan, in Hong Kong and in China, over and above what they have invested in US. US is only 20%. Also, the foreign markets give you an advantage that some of them have very attractive yields. I've seen 7% kind of yields in some companies in Taiwan and Korea. That kind of yield in India is impossible to get on a consistent basis in a good company. And when I say dividend yield, I hope the price doesn't fall, like say Coal India or ITC. Without all that, you can get decent companies with 6-7% yield. Now add another 2% or 3% of currency appreciation, you're talking of an excellent return. There is absolutely no need to invest in India if you're looking at dividend yield. Also, if you're looking at high growth. So these are some of the advantages and some of the flavors that you can add by investing abroad. Now another question which comes up is, should I invest abroad through mutual funds or through the direct LRS route? You can do both, but however the LRS route will definitely attract the attention of the tax guy, and he's going to call you for scrutiny, saying ये कौन सेठ है जो $2.5 lakh बार invest कर रहा है. $2.5 lakh is the upper limit. You can put less than that. $250,000 is what the government of India allows you to invest abroad, provided you have the skills of knowing where to invest, etc. That has one small irritation, that many people may be tempted to say, let my son who is in US be the nominee, or my daughter who is in US be the nominee. That does not make too much sense, because if they are tax citizens of US, they will end up paying a huge amount of estate duty. So don't do that. You're much better off making your wife the nominee or your son the nominee in India. Get the money in India and then give it to them. You will save estate duty. So that is one risk of investing there, which you can choose to circumvent it by making sure that the paper documentation is right. You don't have to worry about estate duty as long as you're not a citizen of US or not paying tax in US. So if you're an Indian resident, you will get the money here. That should not be a problem. Also, what happens is it smoothens out. There are times when the US market is doing well and the Indian market is not doing well. So sometimes when the Indian market is doing well and the US market is, so it helps a little bit more in diversification. It helps you add a variety of companies which are available in Taiwan and Korea and Japan and China, which is not available in India or available in US. So it gives you a greater variety. However, whether you want to take all the trouble, please also understand you run the currency risk. And one more advantage which I see is the PEs and yields in different markets are very different. So whatever happens, for example, all the companies which are in India, the MNCs which are in India, the parents are available in the US at a much lesser PE. So whether it is Procter & Gamble or Colgate or Hindustan Unilever, these are all available abroad at a lesser PE. I wouldn't be surprised if somebody comes out with a fund in India to buy the parents of those companies, aiming at the person. Like if I have shares of Colgate here, the sales pitch would be sell off Colgate in India and invest in this fund. This fund invests in Colgate in US, and there you are getting this plus more at a lesser PE. So those things can happen as long as people have some appetite for investing abroad, which is visible. All these funds are building up, but if you don't understand, if you don't want to, there is absolutely no compulsion. So don't ask me, should I invest abroad? You have a choice, exercise it. Thank you.